Hey, welcome everyone. You are tuned in to the Google Alphabet earnings watch party. Google has been on a really good rise, and I am looking forward to seeing what they have to announce around the Gemini business and seeing how their AI business is really making them far more valuable. And I know that Daryl, you have some information to share. So let me turn it over to you.
Okay. They are scheduled to drop their earnings at 3 minutes after the hour. They're expected to report 111 billion 450 million chump change. Earnings per share of $2.64 per share. The implied move we're expecting is 6.1%, and they only have a short interest of 1%. I pulled out some valuation growth and profitability metrics from Seeking Alpha. They have a forward PE of 32.18 times, and that's compared to the sector median at 13.24 times. They're expected to grow their revenue 14.18% this next year, whereas the sector median is only 3.4%. Their earnings growth expected over the next year is 24.56%, and that's compared to the sector median at 12.65. So they are priced quite a bit higher than the sector, but their growth expectations are much higher than the sector. Then when we get to profitability, we can see they are also much more profitable than the sector. So Google has a net income margin of 32.23% compared to the sector median at 4.53. Then just to give some information, a high level overview of Google, they did cross over the $4 trillion market cap on February the 1st. And that's as they transform their AI from a research project to a real core revenue driver in both the cloud and search. They are the world's librarian. You can think of them as a librarian. They organize the world's information through search, making it the primary gateway for billions of people around the world. They're also a digital real estate mogul. They own the most valuable plots on the web. They own YouTube, Gmail, Maps, and then they rent out space to advertisers as well. And then with the AI utility through their cloud and Gemini, it's providing the electricity, the computing power, and the intelligence that other companies need to build their own AI-enabled applications. So they're a global technology conglomerate, and they're in the interactive media services industry. Their core revenues come from Google services like Search, YouTube, Android, Chrome. And while Google Chrome has become its fastest growing segment, reaching profitability in 2025. Their primary competitors include Microsoft, Amazon, Meta, NVIDIA in the AI infrastructure space. This is kind of a new competitor here. Their competitive moat is built on the network effects and data scale, which now fuels its Gemini AI integration across all products. Their recent achievements include a landmark partnership to power Apple Siri with Gemini, and the Google Cloud segment surpassing $120 billion annual revenue run rate. And then, as Victor reminds us quite often, they're into other bets like Waymo. Alphabet remains the second most valuable company globally, trading at a relatively attractive valuation of 30 times forward earnings compared to its magnificent 7 peers. So their sovereign AI infrastructure is a key theme. Alphabet is moving away from just being a search engine to providing the full AI stack. So they're building the TPU chips, they have the cloud, they have the Gemini models. They're doing the Apple Gemini integration, so they're integrating Gemini into iOS. They have the Waymo expansion. They're scaling their autonomous ride hailing. And with these Q4 earnings, one of the things we'll be looking at is the cloud margin expansion. They have a very wide moat, 90% plus of search market share belongs to them.
And the earnings are out.
Okay, great. We can come back to this if we want to.
All right. So earnings are still, the ink is still wet here. I'm trying to not get my hands dirty. So revenue increased 18%. Looks good. Looks real good. So 18% revenue growth. Google services increased 14%. And this is likely for the quarter. Okay. Yep, fourth quarter. Consolidated. So Google Cloud increased 48%. That is good news.
Wow, that is great news.
Okay. Operating income and profit increased. EPS increased 31%. So for the whole year, revenue was up 15%. And margin was up 32%. Net income went up, about 32%. Okay, good. Looking at the businesses, search is still the biggest. And then we've got YouTube, Google Network. So this is the big number. Then subscriptions, platforms, and devices. So total services, $95.8 billion for the year. Google Cloud was $17.6 billion. And I'm not seeing the Waymo business is tiny, so it's probably not showing up. All right, Google services. So here's Waymo. So they had an investment round in Waymo, majority funded by Alphabet. So, okay. All right, balance sheet should look good. I'm going to skip through that. I think we got the point on revenues. Revenues did increase nicely. Cash flow, cash from operations really went up. Now the CapEx number is going to be a focal point. So purchases of plant, property and equipment. So it really went up from 52.5 billion up to 91.4, but it still leaves them with a lot of cash because they are just a cash generating monster. So that leaves them with a lot of cash flow. And I'll update my valuation. I'm going to update my valuation, with each step by step with you guys, so you guys could see how I'm going to do that. All right. So the statement of cash flows, first glance, looks real good. I'm hoping that they talk about Gemini to some extent. I'm not seeing it yet. All right, so I'll tell you what we're going to do. I'm going to try to use Gemini to look at the document here.
They took about a $15 hit right off the bat, but they are climbing back quickly.
So I'm going to use Gemini to evaluate the Google earnings here. All right. So page 1. So Gemini processed over 10 billion tokens per minute. That seems like a lot. I don't know what it means. This is what's going to make the stock go. They grew 750 million monthly active users. That's got to be good news.
Yep,
So
that's really good news.
All right, so let's see what the stock is doing here. It is down right now, down 2%. So maybe the actual earnings call is going to start in about 23 minutes. I think in that call is when they're going to announce more details about their business, what's going on, and so forth. So we'll give it a little bit of time. For now, what we can do is update our evaluation, or I should say my valuation on the stock. Unless, do you have any screens you wanted to share that maybe let's look at the charts. And while you do that, I'll update the valuation. Does that sound okay?
Yeah, we can look at the intra day after market.
Let's do it. Go for it.
So I saw the price drop down to 312 within just 2 or 3 minutes, right when the earnings were released, but they have recovered back up to about 327 at the moment. So I don't know what this initial hubbub was all about waiting for the earnings, but they're recovering quite nicely. I'm expecting with the numbers you were just showing for them to do pretty well tomorrow, actually. I'll be surprised if they stay down.
Especially the Gemini number. I think
Yeah.
that's the game changer. That's the catalyst, and that's a really good looking number. All right. So want to flip it back to my screen? We can kind of
Sure.
do the valuation. All right.
Sure.
Let's do that.
Yeah, now they're positive again.
All right. So what we're going to do now, everybody, we've got a big audience. We got 579 people on there, and you guys may be new to our channel. So what we do is we cover fundamental and technical analysis. We've got some new numbers from Google Alphabet, and it's time to update a valuation. This is the valuation that I completed October 30th, last time they announced earnings. So it's time to take a look at the new numbers and see what we think this company is worth. So let's do this. Let's update. I'm going to keep this from a history perspective, and then I can also compare where we were, where I was 3 months ago, and then we'll see where we think we're going to go. I was going to grow by 16%. It looked like they grew around that much. So it looks good. I'm going to be referring to their earnings report that we highlighted or went over just a few minutes ago on another screen. You guys can't see it, but that way I can multi-screen and get my data in here. All right, so we're going to take free cash is cash from operations minus CapEx. And the cash from operations was an incredible $164 billion of cash from operations. And the investment of CapEx, putting money into that data center, putting money into Gemini and all the other stuff was 71 billion. So it leaves them with a big chunk of free cash. So this is going to be the cash forecast here, where we go first year free cash flow in the trailing 12 months plus the growth rate. I'm going to leave it at 16, but I am going to tune this one down just a little bit here to 4. And this is going to grow the cash flow over the next 4 years, terminal value being all cash flows beyond year 4. Now, let me take a look at that balance sheet and see what kind of cash I've got to work with here. All right, so they have a lot of cash, man. We've got $30,708,000,000 of raw cash, and then they got $96,135,000,000 in marketable securities. So that's a pretty good pile of cash there. You can call it a little warehouse of cash. And now I'm going to look at debt. What kind of long-term debt am I dealing with? They are accumulating some debt. The debt's going from 10.8 billion up to 46.5 billion. So this AI build is really generating a lot of spend. That's needless to say. That's what's going on. So the balance sheet changed. So on cash flow, if I forecast out with a 16% growth rate, I'm not able to get to their stock price. It's actually too expensive by 9%. If I measure the value of those cash flows compared to today's stock price, I'm going with a 7% discount rate because interest rates are falling. And in my mind, a company of the quality of Google with 126 billion of cash and this much debt, I'm good with 7%. This is a low risk stock, in my opinion. They have a solid foundation business that is growing, and they've got some real good businesses coming that are younger, growing fast, and looking good. So as I look at the earnings per share, looking forward 12 months, it's $11.55, an improvement to what we had before. I'm giving them a PE of 30. They deserve a PE. It's a strategic company. A lot of people want to own it. So I'm good with that. And this guy should be a 12, getting closer to the growth rate that's expected. So look at that. Fair value. This stock is fairly priced, Daryl.
Yep. Yep.
That is crazy. It's crazy because it's really moved over the last, call it 9 months. It's really moved. And the market has moved it to a fair price if based on my calculations. But here I arrived at fair price. It is a strategic stock for me. I own it because it's Google, and I've owned it. And I've been a big Google guy for years. And on this channel, I've been talking about Google for 2 years as it being a very good investment. So I'm glad that it's fair price. Before I did this valuation, what was I at? I was at a 20% discount. And the difference being, I think, is one, I had a higher terminal growth rate, and I'm thinking that might be a little too optimistic. The free cash flows were a little higher, just a little higher. They're spending a lot of money in that data center, so I think that's bringing down their value a bit. And then the balance sheet, I would say the balance sheet's about as good as it was before. So it's really the change in terminal value that I made, and then the lower free cash flow. The earnings per share did increase, so it gave me a better valuation. 8% was the number before as a discount. Now it's 14. So overall, not a surprise that Google is fairly priced. I hadn't been adding shares because it's gone up so much. So that's where we're at with the stock price. Let's take a peek and see what the market's doing with the stock. The market is saying, hey, it's fairly priced. it's right around its price when it closed. Now, over the last 30 days, this stock is doing okay, up 5.71. That's not bad. And over the last 5 days, it's down a little bit. It was under pressure today. It was down 2.16% today. And over the 1 year, this one is getting it done, up 60.49%. It's gotten into the $1 trillion level of stocks. And this stock here was in second place, but Apple said, hey, hold on a second. Don't forget about us. And Apple went up today and took the silver medal away from Google. So Google right now is setting itself up for the bronze. I'm going to talk a little Olympic lingo since the Olympics are coming. And NVIDIA is still with the top spot. Apple's in second place, and Google is in third. So that's what's happening with Google. It's not moving a whole lot. I think part of the reason is, it's a market that is moving capital from tech over to other sectors like energy, healthcare, the pharma device. Eli Lilly had a terrific day. They had good earnings, up 10%. And we've got capital going to material stocks, real estate, staples. I think there's a little more fear on the street, so it's rolling over to staples. So the money's getting out of these sectors and moving over. And Alphabet may be pretty much, the earnings were good. I would say that the top line growth could have been better. I think that was maybe it left a little bit to be desired. Hey, could we have seen a little bit better growth on the top line? Absolutely. I was hoping that they would have exceeded. In fact, let's take a look at the forecast, because I was looking at this forecast earlier today on our stream. And I do recall, I think it was a 17% expectation. No, actually, it was higher. We were expecting 19% growth. And let me double check what we read here. Their growth was 18%. So it was 18%. So it was a little lighter than expectations, right? We were expecting almost 19. Now I was hoping they'd hit like 20 here, and it would have been a real nice quarter. For the year, we were expecting 17%, 17.4%, and the next year 14, then 13, then 10. So it's become a massive company. It's already a massive company, $410 billion of revenue. That is humongous. And what was the growth number for the full year? This was for the fourth quarter. And for the full year was 15%. So I think that is part of the lack of enthusiasm, I think, because what we were expecting was 17.4. So they did not meet that expectation. Am I reading it right, Daryl?
I think so. But I
Right.
think we've really only had a half a year of Gemini really contributing. I don't know
Mhm.
how they were getting these numbers, but I bet the number is better than 13 next year.
Yeah, I think so. I think that's going to be the case.
They'll have a full year.
Yeah. All right. So let me look at the chat here. What's going on? We got a lot of people on the stream. A lot of people are chatting away. Sam, good to see you. Very good to see you. Thanks for joining. Tobias, checking it out. Bo, great to see you, Bo. You're doubling down with us. We saw you in the stream. Dre, good to see you. And Stingray Rasta, good to see you, man. It's been a little while. And then go Google goggles. Nice. Go Shadow Guy. And we need a bigger discount on Google. I would agree with that. Yeah, right at fair price is where we're at. So I make money by buying stocks when they're discounted. And Google, I've made money on, but I'm just going to sit on my shares because I don't want to sell them. This is going to be one of the most important businesses really for the next 5 to 10 years. So I'm good holding. Anything on the charts you wanted to show in addition to where we're at, Daryl?
No, they're just kind of floundering around right now. I think they're waiting on the call. It'll be interesting to see what happens when the call starts.
All right. And I've got that queued up here. We'll see what happens. Let's see here. I think that's out of the call might come out some of the color that could further create enthusiasm for the stock around the Gemini business. I think that'll be a big part of that call where they talk about the Gemini business, and let's see if it's really going to crush everybody else. If it's when it's going to be monetized and what's the impact that they expect from the monetization and the income streams. They could also talk about, Waymo. Will Waymo be a separate company, a separate stock, or will it just continue to be part of Alphabet? That's a question.
Yep, that is a good one.
Yeah. I don't know.
I don't
I
know
always
either.
I always associate Waymo as like an Alphabet business, but I could be wrong. It would, and maybe it would be better off as a business on its own because it's going to be a consumer based business, with it getting a lot of customers and operating kind of like an Uber like. But that is to be determined. That on its own, I think it's $130 billion valuation, the Waymo business. So it'll be important to see what happens there. All right. So the numbers are out. Analysts have gotten their hands on them. I think there's, fair price calculation on my side. Google beats Wall Street expectations. Really? They surpassed 400 billion. And it projects significant AI spending. Well, we all know that. We're seeing the spending. What about the revenues? Yeah, it's that CapEx is, I think, that's where I think there's a pause because I know that judging from Microsoft, right? Microsoft had very good numbers. And I think once investors got their eyes on the CapEx, they couldn't take their eyes off of it. And it could be a big issue for Alphabet like it was for Microsoft. I hope it's not like a 12% sell like it did for Microsoft, because Google is the biggest position in my portfolio. That would hurt. That one would hurt, but we'll see. Looks like Peter is on. Peter really knows his stuff here. He did tell me Google is expensive. I listened to Peter. He's smart. And he's got some good analysis, by the way. You want to check ARM? Yeah, we can check ARM. We'll check that, and I'll put that on the list. We're going to check. We're going to keep track of Google, and then we can look at Qualcomm if they announced, and then we'll take a look at ARM. Did ARM announce today? Was that a stock that announced? Anderson, good to see you. Go Google, but fair priced, right? Yeah, you got it. And keep in mind, Google has been going up. So it's not like, oh, wow, man, this thing's a dog. No, it's been a winner. It's been a real good winner. Out of the most valuable companies, the ones near the top, it's had the best appreciation. And now, where's it going to go from here? If they can keep growing, maybe go from 15 to 20% growth. Now we're talking that kind of growth would really make the stock move. We'll see. So looks like Qualcomm is down according to down big. Oh no. What's going on, Qualcomm? Down 9%. What did they disappoint on? Okay, so the memory shortage drags on their forecast. I guess the memory shortage is slowing down the unit sales for Qualcomm. Okay, that makes sense. That makes sense. And going 8.9%, that is not good. Over the 1 year, this has been a troubled stock, and it's going to have more trouble ahead. So that is Qualcomm. I think the other stock that Peter was bringing up was ARM Holdings. And did they announce today? Yeah, they announced today, and the stock is down. So down 32% over the 1 year. And these guys help architect, develop, and license CPU products and related technologies for semiconductor companies. They actually partner with these big companies and enable them to create new products. So that's what's going on with ARM. So the two semiconductor stocks that announced today are down. And Qualcomm, it's not a giant surprise. They're not in the data center, and being in the data center is really what's made the semiconductor space do better. And since they're not there, they don't get to participate with NVIDIA and everybody else. All right, so that is Google. Alphabet. Let's take a look at CNBC to see what they have to say about Google. So it's the AI spending that's really grabbing everybody's attention, which is understandable. That was a big spend number. And I showed you that the CapEx is causing the free cash flow to come down. And when that happens, the value of the company goes down. It's less free cash flow that's going into the business. So that's part of the reason why the stock's not going up. And this trade, right, it's not early. It's a little late. So let's take a look at some of these numbers here. So the earnings per share was a little better. Revenue was a little better. The Google Cloud number, that was a lot better. So that looks good. Okay. YouTube advertising was a little lower than expected. And then traffic acquisition cost was a little higher. Okay. All right. So that's what's going on there. The stock's pretty much waiting for the earnings call to begin. And let's see here. It's still not on yet. It's going to be on in about 5 minutes. It looked like today Meta really sold off. Does anybody know what happened to Meta? Why did it sell off so much? I understand that the semiconductor space, and I kind of don't understand why AMD sold off so much. I thought the earnings were good, but there was a big sell off in semiconductor. Did you notice that software started the day really low during the stream this morning?
Yep.
I mean, some of these stocks were down 6% and they ended up closing in the green. So that was good to see, by the way. I thought it was just going to be a real bad situation, but they recovered. Well, that's interesting. What's going on? I've heard that a lot of these stocks are being shorted, and that's interesting. Let's take a peek at one of them while we wait for Google to start their earnings call. And I'm going to look at Adobe. What's their short interest? Let's see here.
2.9%.
That's it. That's not a lot.
It's more
So I
than
guess
some of the other tech companies, though.
I get that, but high short interest in my book is like 20%. It's like that's high. Okay. So that story I heard, I think I was in the gym. I heard that kind of like from afar. All right.
What's
So we're
another
2
one
minutes.
like CRM? Yeah, they're at 1.9%.
That's not bad.
Give me a couple more names.
How about Intuit?
INTU 1.83. So they're all right around that, just under 2%.
And excuse me for a sec. I'm going to make sure that I've got the volume settings set up. So give me a second here. So all right. So now when the volume comes on here, we'll all be able to hear it. All right. Come on, Alphabet. Say something good to make the stock price rise. I do like Google's earnings announcement. It's kind of like they really have their act together. I thought the Microsoft earnings call was like really confusing, and they just went over a lot of figures and facts, and it was just kind of like, whoa. It's like being in a giant train station that, you were just hearing all this information coming at you. So we'll see how these guys go. So Mike is saying Daryl sold Elf at $99 and he's glad he waited.
Yeah, we were chatting about the chart a little earlier.
Okay.
Every time he asks for ELF, I send him ELV, and every time he asks me for ELV, I send him ELF. that one little difference gets me.
Thank you. Good afternoon, everyone, and welcome to Alphabet's fourth quarter 2025
Can you hear
earnings
that?
conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Hi, everyone. Thanks for joining us. It was a tremendous quarter for Alphabet. The launch of Gemini 3 was a major milestone, and we have great momentum. Alphabet annual revenues exceeded $400 billion for the first time. This quarter, search continued to accelerate with revenues growing 17%. YouTube's annual revenues surpassed $60 billion across ads and subscriptions. Cloud significantly accelerated with revenues growing 48%, now on an annual run rate of over $70 billion. Backlog grew by 55% quarter over quarter to $240 billion, representing a wide breadth of customers driven by demand for AI products. We have over 325 million paid subscriptions across consumer services, with strong adoption for Google One and YouTube Premium. In addition, we have sold more than 8 million paid seats of Gemini Enterprise, which we launched just 4 months ago. And our Gemini app now has over 750 million monthly active users. We are also seeing significantly higher engagement per user, especially since the launch of Gemini 3 in December. Overall, we are seeing our AI investments and infrastructure drive revenue and growth across the board. To meet customer demand and capitalize on the growing opportunities ahead of us, our 2026 CapEx investments are anticipated to be in the range of $175 to $185 billion. Today, I'll provide an update on our AI progress and then share highlights from Search, Cloud, YouTube, and Waymo. First, AI progress across the full stack. Our unrivaled infrastructure serves as the bedrock of our AI stack. We have the industry's widest variety of compute options. That includes GPUs from our partner NVIDIA, who announced at CES that we'll be among the first to offer their latest Vera Rubin GPU platform, plus our own TPUs that we have been developing for a decade. In December, we announced our intent to acquire Intersect, which provides data center and energy infrastructure solutions. As we scale, we are getting dramatically more efficient. We were able to lower Gemini serving unit costs by 78% over 2025 through model optimizations, efficiency, and utilization improvements. Next, world-class AI research, including models and tooling. We offer the most extensive model portfolio in the world and lead across text, vision, and image-to-video LM Arena leaderboards. Gemini 3 Pro drives the state-of-the-art in reasoning and multimodal understanding. It has seen the fastest adoption of any model in our history. Since launch, Gemini 3 Pro has consistently processed 3 times as many daily tokens on average as 2.5 Pro. Our latest model powers Google Anti-Gravity, our new development platform where agents can autonomously plan and execute complex software tasks. It already has more than 1.5 million weekly active users after launching just over 2 months ago. Our first-party models like Gemini now process over 10 billion tokens per minute via direct API used by our customers, up from 7 billion last quarter. Third, bringing AI to our products and platforms. We are shipping innovation at scale to bring helpful AI features to people everywhere. In January alone, we have launched personal intelligence in AI mode in Search and the Gemini app, introduced new features to Gmail and updated Veo, reimagined Chrome as an AI-first agentic browser through features like Chrome Auto Browse, announced Project Genie, which lets users create and explore interactive worlds generated in real time using Genie 3, our general-purpose world model. And we laid the groundwork for shopping in the AI era by introducing a new open standard for agentic commerce, the Universal Commerce Protocol, built alongside many retail industry leaders. Finally, from Android to Pixel, we are getting our best AI capabilities into people's hands. At CES, a range of partners, including Samsung, showcased how they are bringing Gemini to more devices, from XR to the living room and beyond. And to confirm the rumors, we'll be introducing our Pixel 10a to our best ever rated Pixel 10 series very soon. Turning now to key highlights from the quarter, starting with Search. Search saw more usage in Q4 than ever before, as AI continues to drive an expansionary moment. We have executed with incredible speed. We shipped over 250 product launches within AI mode and AI overviews just last quarter. We have integrated Gemini 3 directly into AI mode in search. Now search can better understand your query, dive deeper on the web, and generate interactive UI experiences. And last week, we upgraded AI overviews to Gemini 3, giving users a best-in-class AI response at the top of the search results page. We have also made the search experience more cohesive, ensuring the transition from an AI overview to a conversation in AI mode is completely seamless. These new experiences are proving to be more helpful and are driving greater usage. A few highlights. First, once people start using these new experiences, they use them more. In the US, we saw daily AI mode queries per user double since launch, and AI overviews continue to perform very well. Second, people are engaging in longer, more complex sessions. Queries in AI mode are 3 times longer than traditional searches. We are also seeing sessions become more conversational, with a significant portion of queries in AI mode now leading to a follow-up question. Third, people are searching in new ways beyond text. Nearly 1 in 6 AI mode queries are now non-text using voice or images. And Circle to Search is now available on over 580 million Android devices. Next, Google Cloud. Our growth in revenue, operating margin, and backlog highlights the strength of our entire portfolio. One, we are winning more new customers faster. We exited the year with double the new customer velocity compared to Q1. 2, we are also signing larger customer commitments. The number of deals in 2025 over $1 billion surpassed the previous 3 years combined. And 3, we continue to deepen our relationships with existing customers who are outpacing their initial commitments by over 30%. Nearly 75% of Google Cloud customers have used our vertically optimized AI, from chips to models to AI platforms and enterprise AI agents, which offer superior performance, quality, security, and cost efficiency. These AI customers use 1.8 times as many products as those who do not, enabling us to diversify our product portfolio, deepen customer relationships, and accelerate revenue growth. Our product line has multiple monetization levers spanning infrastructure, platform, and high-margin AI-powered products and services, with 14 product lines, each exceeding $1 billion in annual revenue. We offer leading infrastructure for AI training and inference to our cloud customers, with the industry's widest variety of compute options, from our own 7th-generation Ironwood TPU to the latest NVIDIA GPUs. Our 10-year track record in building our own accelerators with expertise in chips, systems, networking, and software translates to leading power and performance efficiency for large-scale inference and training. Our cloud AI accelerators serve the leading frontier AI labs, capital markets firms like Citadel Securities, enterprises like Mercedes-Benz, and governments for high-performance computing applications. We also offer our leading generative AI models, including Gemini, Imagen, Veo, Chirp, and Lyria, to cloud customers. In December alone, nearly 350 customers each processed more than 100 billion tokens. In Q4, revenue from products built on our generative AI models grew nearly 400% year over year, significantly accelerating from the prior quarter. Today, more than 120,000 enterprises use Gemini, including AI unicorns like Lovable and OpenEvidence, and global enterprises like Airbus and Honeywell. 95% of the top 20 and over 80% of the top 100 SaaS companies use Gemini, including Salesforce and Shopify. Gemini is becoming the AI engine for the world's most successful software companies. Leading enterprises are also driving strong demand for our enterprise AI agents. We have sold more than 8 million paid seats of Gemini Enterprise, our enterprise AI platform, to more than 2,800 companies, including BNY and Virgin Voyages, to streamline knowledge management and automate processes. Gemini Enterprise managed over 5 billion customer interactions in Q4, growing 65% year over year, for customers including Wendy's, Kroger, and Woolworths Group. Our integration of Gemini in Google Workspace is driving wins with global brands like Schwartz Group and public sector organizations like the US Department of Transportation. We are also seeing momentum with independent software vendors. Revenue from AI solutions built by our partners increased nearly 300% year over year, and commitments from our top 15 software partners grew more than 16x year over year. Before moving on, I'm pleased that we are collaborating with Apple as their preferred cloud provider and to develop the next generation of Apple Foundation models based on Gemini technology. Up next, YouTube. I want to highlight 4 points. First, streaming. In the living room, YouTube continues to be the #1 streamer in the US for nearly 3 years, according to Nielsen. From the NFL to Coachella, YouTube is where people watch today's biggest popular culture moments unfold. Second, subscriptions. We continue to see strong subscription revenue growth across YouTube, particularly YouTube Music Premium. We'll soon launch new YouTube TV plans, bringing more choice and flexibility to subscribers with over 10 genre-specific packages. And the NFL has seen strong NFL Sunday Ticket subscriber growth with YouTube, with the highest paid subscriber number ever in the history of the product. Third, podcasts. To illustrate YouTube's popularity, in October 2025, viewers watched over 700 million hours of podcasts on living room devices, up 75% from just a year prior. And fourth, AI is transforming the YouTube experience for both creators and viewers. On average, every day in December, over 1 million channels used our new AI creation tools to supercharge their creativity. During that same month, more than 20 million viewers used our new Ask tool, powered by Gemini, to learn more about the content they watched. And finally, Waymo. This week, Waymo raised its largest investment round to date and is well positioned to continue its momentum with safety at the core. In December, we surpassed 20 million fully autonomous trips and are now providing more than 400,000 rides every week. Waymo continues to expand its service territory. Its 6th market, Miami, launched 2 weeks ago, and Waymo will soon expand its service to multiple cities across the US and in the UK and Japan. The team has made incredible progress on important capabilities, including opening up public service to airports and freeways. In closing, 2025 was a fantastic year for the company. A big thanks to our employees and partners worldwide. We are really well positioned going into 2026. Now, over to Philip.
Thanks, Sundar, and hello, everyone. I'll cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, YouTube, and partnerships. Google services revenues were $96 billion for the quarter, up 14% year on year, primarily driven by accelerated growth in search. Adding some further color to our results. The 17% increase in search and other was led by broad strength across all major verticals, with retail particularly strong. On YouTube, the 9% growth in advertising revenues was driven by direct response. Network advertising revenues were down 2% year on year this quarter. Starting with search and other revenues, which delivered over $63 billion in revenue for the quarter. Sundar mentioned the expansionary moment for search. The same is true for ads. We're investing in AI to drive significant improvements across all areas of marketing. We're expanding the entire playing field that advertisers can compete on. AI gives businesses the ability to reach more customers in more places than ever before. Gemini uniquely positions us to bring the transformational benefits of AI to ads in 3 critical areas for our customers: ads quality, advertiser tools, and new AI user experiences. First, ads quality. We've been deploying Gemini models to improve query understanding at a rate of almost a launch per month for the last 2 years. These improvements drive better query matching, ranking, and quality, making search ads even more effective. With Gemini across our ads quality stack, we evaluate relevance with greater accuracy than with previous generations of models. This has significantly improved our ability to systematically deliver more helpful, high-quality ads, contributing to a meaningful reduction in irrelevant ads served. Gemini's understanding of intent has increased our ability to deliver ads on longer, more complex searches that were previously challenging to monetize. Gemini models also have a significant impact on query understanding in non-English languages, expanding opportunities for businesses to scale globally. Second, we're building more agentic actions into our advertiser tools. Businesses can now leverage Gemini in conversational experiences within Ads and Analytics Advisor to identify and run recommended actions such as generating new campaigns. Advertisers use Gemini as a real-time partner to assemble creatives. In Q4 alone, they used Gemini to create nearly 70 million creative assets via text customization in AI Max and PMax. For instance, Aritzia, Canada's premier fashion house, used AI Max to find new high-value customers that traditional strategies miss, delivering an 80% incremental uplift in conversion value for Q4. L'Oreal, one of the first alpha testers, used AI Max in 2025 across 800 unique campaigns in 23 countries and 30 brands. AI Max enabled the L'Oreal Group to maximize its presence across the full consumer journey, fuel its consumer growth, and increase revenue for DTC brands like NYX by 23%. The third area is how we monetize new AI user experiences in search. We have significantly increased our focus on AI mode and are in the early stages of experimenting with AI mode monetization, like testing ads below the AI response, with more underway. For example, we announced direct offers, a new Google Ads pilot, which will allow advertisers to show exclusive offers for shoppers who are ready to buy directly in AI mode. This new type of sponsored content uses AI to match the right offer provided by the retailer to the right user. As Sundar mentioned, we are building the era of agentic commerce and working with our partners to introduce the Universal Commerce Protocol in our consumer products and across the web. We've received tremendous feedback from the industry. Soon, people can use a new checkout experience to buy directly in AI mode and Gemini from select merchants. Turning now to YouTube, which remains the #1 streamer in the US for nearly 3 years, according to Nielsen. YouTube creators are providing an unmatched breadth of content. Our investment in AI innovation across creativity, viewing experience, and monetization continues to pay off. We're seeing strong traction in our subscription business, are innovating to meet consumers where they are. We added a new sports tier for YouTube TV at a lower price point. YouTube Premium Lite is proving to be a popular choice. And we continue to deliver strong year-on-year growth across YouTube subscriptions, particularly YouTube Music and Premium. Looking at monetization across YouTube, momentum continues in Shorts and the living room. Shorts now averages over 200 billion daily views, and as we've shared before, in a number of countries, Shorts earns more revenue per watch hour than traditional in-stream on YouTube, including the US. The retail vertical continues to grow, fueled by smaller advertisers increasingly adopting demand gen. Likewise, direct response continues to benefit from the momentum we're seeing with small and medium-sized advertisers. Viewers trust product and brand recommendations from YouTube creators, and we're focused on making YouTube a premier shopping destination. Innovations like shoppable ad formats are improving advertiser return on investment. During Cyber 5, advertisers piloted shoppable mastheads, a new interactive ad format where viewers browse products and send links to their phones for an easy shopping experience. On brands, our Creator Partnership Hub makes it easier for brands to find creators and develop campaigns. This holiday season, brands like JCPenney, Old Navy, and Target worked with creators for their holiday campaigns. Mattel partnered with 8 top YouTube creators to reach families during the peak holiday shopping season in a campaign that helped drive a 25% increase in search volume for Uno. As always, I wrap with the progress we're seeing across partnerships, where customers tap into the strength and breadth of Google's products to accelerate their transformation. I would start by joining Sundar in saying how pleased I am that we are collaborating with Apple as their preferred cloud provider and to develop the next generation of Apple Foundation models based on Gemini technology. We partnered with Reliance Jio to provide over 500 million consumers with an 18-month free trial of our Gemini suite of products and 2 terabyte of cloud storage. Reliance Enterprise customers will also get access to Google Cloud's Gemini Enterprise and TPUs, bringing the best of Google AI to every employee and workflow. The Home Depot is applying Google AI across the board, from cloud tools to AI-powered ads, and YouTube creator partnerships that connect with the next generation of doers. Their investments in PMax and YouTube creator partnerships have resulted in double-digit increase in ad clicks and visits. In closing, I'd like to thank Googlers everywhere for their contributions to our success, and as always, to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the fourth quarter, unless I state otherwise. I will start with results at the Alphabet level and will then cover our segment results. I'll end with some commentary on our outlook for the first quarter and full year 2026. 2025 was a strong year of innovation and execution for Alphabet. These efforts, combined with our investments in AI, drove meaningful results across the business. For the full year 2025, Alphabet consolidated revenues were $403 billion, up 15% on a reported and constant currency basis. Moving to Q4 performance, we delivered strong growth in the fourth quarter. Consolidated revenues reached $113.8 billion, up 18%, or 17% in constant currency, and was driven by an acceleration in search and cloud revenues. Turning to costs and expenses, we reported a $2.1 billion stock-based compensation charge due to an increase in Waymo's valuation related to the investment round was announced on Monday. The vast majority of the charge was reflected in R&D expenses. Total cost of revenue was $45.8 billion, up 13%. Tech was $16.6 billion, up 12%. Other cost of revenues was $29.2 billion, up 13%, with the increase primarily driven by depreciation associated with the deployment of our technical infrastructure, content acquisition costs largely for YouTube, and other technical infrastructure operations costs. Total operating expenses were up 29% to $32.1 billion. R&D expense increased by 42%, driven by compensation and depreciation. The increase in compensation was due to the Waymo charge and investment in AI talent. Sales and marketing expenses were up 12%, primarily driven by marketing investments to support the Gemini app and search. And G&A expenses increased 21%, primarily due to a shift in timing of our charitable contributions. Operating income increased 16% to $35.9 billion, and operating margin was 31.6%. Both operating income and operating margin were negatively impacted by the $2.1 billion Waymo charge in the quarter. Other income and expenses was $3.2 billion, primarily due to unrealized gains in our non-marketable equity securities portfolio. Net income increased 30% to $34.5 billion, and earnings per share increased 31% to $2.82. We generated record operating cash flow of $52.4 billion in the fourth quarter and $164.7 billion for the full year. This translated into $24.6 billion of free cash flow in the fourth quarter and $73.3 billion for the full year. We ended the quarter with $126.8 billion in cash and marketable securities and $46.5 billion in long-term debt. Turning to segment results, Google Services revenues increased 14% to $95.9 billion, reflecting strong growth in search and subscriptions. Google Search and other advertising revenues increased by 17% to $63.1 billion, representing another strong quarter with continued growth across all major verticals, with the largest contribution from retail. YouTube advertising revenues increased 9% to $11.4 billion, driven by direct response advertising. Results were negatively affected from the lapping of the strong spend on U.S. election in the fourth quarter of 2024 that we've mentioned on previous earnings calls. Network advertising revenues of $7.8 billion were down 2%. Subscription platforms and devices revenues increased 17% this quarter to $13.6 billion, due to strong growth in YouTube subscriptions, particularly YouTube Music and Premium, and growth in Google One, which benefited from increased demand for AI plans. Google Services operating income increased 22% to $40.1 billion, and operating margins was 41.9%. The Google Cloud segment delivered outstanding results in the fourth quarter as the business continued to benefit from strong demand for enterprise AI products. Cloud revenue accelerated meaningfully and were up 48% to $17.7 billion. Revenues were driven by strong performance in GCP, which continued to grow at a rate that was much higher than Cloud's overall revenue growth rate. As Sundar noted, we're driving performance through strong growth in the win rate of new customers, signing larger customer commitments, and increasing spend with existing customers. GCP's performance was driven by accelerating growth in enterprise AI products, which are generating billions in quarterly revenues. We had strong growth in both enterprise AI infrastructure, driven by deployment of TPUs and GPUs, and enterprise AI solutions, which benefited from demand for our industry-leading models, including Gemini 3. Core GCP was also a meaningful contributor to growth due to strong demand for infrastructure and other services, such as cybersecurity and data analytics. We also had double-digit growth in Workspace, driven by an increase in average revenue per seats and the number of seats. Cloud operating income was $5.3 billion, more than doubling year over year, and operating margin increased from 17.5% in the fourth quarter of last year to 30.1%. Google Cloud's backlog increased 55% sequentially and more than doubled year over year, reaching $240 billion at the end of the fourth quarter. The increase in backlog was driven by strong demand for our cloud products, led by our enterprise AI offerings from multiple customers. In other bets, revenues were $370 million, and operating loss was $3.6 billion, reflecting the $2.1 billion Waymo charge I mentioned earlier. We allocate resources in other bets to businesses like Waymo, where we see meaningful opportunities to create value. Alphabet funded a significant portion of the $16 billion investment round that Waymo announced on Monday, which will allow the business to accelerate its global expansion. CapEx was $27.9 billion for the fourth quarter and $91.4 billion for the full year, in line with our expectation. The vast majority of our CapEx was invested in technical infrastructure, with approximately 60% of that investment in servers and 40% in data centers and networking equipment. In Q4, we returned capital to shareholders through $5.5 billion of share repurchase and $2.5 billion of dividend payments. Turning to our outlook, I would like to provide some commentaries on factors that will impact our business performance in the first quarter and full year 2026. First, in terms of revenues, we're pleased with the overall momentum of the business. At current spot rates, we would expect to see an FX tailwind to our consolidated revenues in Q1. However, the volatility in exchange rates could affect the impact of FX on Q1 revenues. In Google Services, we expect growth to be driven by ongoing innovation in the user experience, as well as improved ROI for advertisers, keeping in mind the normal seasonal pattern for advertising revenue. In Google Cloud, we're seeing significant demand for our products and services, which we expect to continue to drive strong growth despite the tight supply environment we're operating in. Moving to investments, the investment we have been making in AI are already translating into strong performance across the business, as you've seen in our financial results. Our successful execution, coupled with strong performance, reinforces our conviction to make the investments required to further capitalize on the AI opportunity. For the full year 2026, we expect CapEx to be in the range of $175 billion to $185 billion, with investments ramping over the course of the year. We're investing in AI compute capacity to support frontier model development by Google DeepMind, ongoing efforts to improve the user experience and drive higher advertiser ROI in Google Services, significant cloud customer demand, as well as strategic investments in other bets. Keep in mind that the availability of supply, pricing of components, and timing of cash payments can cause some variability in the reported CapEx number. In terms of expenses, as we've discussed on previous calls, the significant increase in our investments in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expense and related data centers operations costs such as energy. In 2025, depreciation increased by nearly $6 billion, or 38%, from $15.3 billion in 2024 to $21.1 billion in 2025. Given the increase in our CapEx investments in recent years, we expect the growth rate in 2026 depreciation to accelerate in Q1 and meaningfully increase for the full year. We're also planning to continue hiring in key investment areas such as AI and cloud. In 2025, our teams delivered amazing innovation, executing with a high level of discipline and velocity. These efforts provided great experiences for consumers and outstanding performance for creators, partners, and enterprise customers, driving strong revenue growth. I want to take this opportunity to thank our employees for their contribution to this impressive performance. Now, Sundar, Philip, and I will take your questions.
Thank you. As a reminder, to ask a question, you will need to press *1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And your first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have two, one on Agentic, one on YouTube. The first one on Agentic, Sundar, I'd be curious to hear about, as you look back at 2025, where do you think you made the most progress on new types of Agentic commerce products? And then looking into 26, where are you most optimistic to sort of have even more progress and utility for users and your advertisers? And the second one is on YouTube. You know, we've seen a lot of the new content creation models like Genie, et cetera. Walk us through sort of the Alphabet long-term vision for how Genie and some of these content creation tools could be integrated into YouTube over time.
Great. Thanks. Thanks, Brian. First, maybe I'll take the Agentic part first. You know, I definitely think 25 was more about laying the foundation, you know, getting the models to start being more robust in Agentic use cases. And, you know, obviously coding is the area where, you know, the progress was the most felt. In areas like commerce, I think we spent the year working with the ecosystem to develop the underlying protocol that's going to be needed for this agentic world. So I think the launch of Universal Commerce Protocol at NRF in January with a bunch of partners, founding partners, I think has been super well received. So I'm excited now that we've laid the foundation of interoperability on which agentic commerce can work. And now we are integrating those experiences into Gemini, AI mode, and so on. So I think this is the year where you will see consumers actually being able to use all of this, and I'm excited about the opportunity ahead. On YouTube, look, super excited by Genie. I'm blown away by, you know, spent a lot of time creating this incredible worlds. I think it's going to have a wide level of applicability. I think area where we shine in general is multimodality and representing the real world. And I think Genie is a further step in that direction in terms of building world models. All the innovation we are doing, be it our Imagine, Veo, Lyria, Genie, all that work we bring into our products and to our cloud customers. And YouTube is going to be a natural place for creators. We are going to keep incorporating these tools. Already creators are responding by adopting these, but we do want to put creators at the center of the experience. And that's very, very important to us. So it's for us making sure YouTube is a voice for creator expression is the foundation by which we will approach this.
Great. Thanks, Sundar.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thanks so much for taking the question. Two, if I could. Over the last couple of earnings calls, we've talked a lot about imbalances between demand and capacity for AI, both internally and externally. With the step function change in absolute capital dollars you're projecting now in 26, can you talk about the pathway to closing the gaps for the need for compute, both internally and externally, and how to think about some of the outputs of closing that gap as the year progresses? And again, the second part would be against that level of spend that you're now projecting for 26. How do you think about continuing to find operating efficiencies inside the business to fund those growth investments as well? Thank you.
Thanks, Eric. You are right, and we've been supply constrained even as we've been ramping up our capacity. Obviously, our CapEx spend this year is an eye towards the future, and you have to keep in mind some of the time horizons are increasing in the supply chain, etc. So we are constantly planning for the long term and working towards that. And obviously, how we close the gap this year is a function of what we've done in the prior years, right? And so there is that time delay to keep in mind. I expect, the demand we are seeing across the board, across our services, what we need to invest for future work for Google DeepMind, as well as for cloud, I think is exceptionally strong. And so I do expect to go through the year in a supply-constrained way. And maybe Anat can touch on the second part.
Sure. Thanks, Eric, for the question. I've mentioned on one of the previous earnings call our approach to how we look at efficiency and productivity. And we don't view this as an episodic one-time project or effort, but rather how we run the business on a regular basis and always seek additional opportunities to drive efficiency across the business. And certainly with the demand we're seeing, whether it's from external customers or across the organization, the more capital we can free up within the organization to invest, the better we can turn this flywheel of making investments to drive future growth. And we're doing this across the organization, whether it's within our technical infrastructure. Certainly when we invest at these amounts, we look at how we can ensure that we are the most efficient with every dollar that goes towards our technical infrastructure. There are scientific innovation that are part of that process. Technical innovation, as you know, and we've mentioned before, we primarily focus on construction of our own data centers. We do partner with some external parties on lease on occasion, but most of our data center we construct ourselves, and we ensure that we do it in the most efficient way, in a way that matches our workloads and our needs. We look at coding productivity that Sundar mentioned in the past. About 50% of our codes are written by agents, coding agents, which are then reviewed by our own engineers. But certainly it helps our engineers do more, move faster with the current footprint. We look at how we run the business across the organization. So using AI within the business to drive daily operations. It can be all the way from the engineering team to small teams within our back office. Even within my finance team, for example, we deployed agents within our treasury organization. We're deploying agents within how we pay and reconcile invoice, et cetera. So there are opportunities across the business that we evaluate on a regular basis to ensure we can free up more of that capacity to invest in our future.
Your next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking questions. I have two. Over the last couple of years, we've seen considerable large language model leapfrogging, and many expect that to continue. What are the ways that Google can build and maintain its Gemini position around data and distribution and product integration? And then how should we think about the potential for TPUs to move outside of Google Cloud and into external data centers and develop as an incremental revenue stream? Thank you.
Doug, look, I think the LLM frontier, it's been an exciting trajectory, and I think 2026 will continue to show that progress. We're obviously improving these models across many paradigms, right? On pre-training, post-training, test time compute, and so on. And we are bringing multimodal models into the picture. We are bringing agentic capabilities. The coding area is showing a lot of progress, and obviously integrating all of this together and offering a great customer experience through our products as well as through our APIs to our cloud customers. To me, feels like there's a lot of headroom ahead. And as you've seen our trajectory over the past 2 years in terms of how we've been making progress, I think we are in a very, very a relentless innovation cadence, and I think we are confident about maintaining that momentum as we go through 26. In terms of TPUs, I would think about it as it's reflected in our overall part of what makes Google Cloud an attractive choice is the wide choice of accelerators we bring to bear here, and we meet customers in terms of what their needs are and the choice, as well as other things we bring as part of Google Cloud, the end-to-end efficiencies in our data centers, all of that comes to bear. And that's what you see in the strong momentum in Google Cloud. And given the overall investment we are making, we expect to be able to drive that momentum there. So that's how I would think about it.
Thank you, Sundar.
Your next question comes from Mark Mahaney with Evercore. Your line is now open.
Thanks. Two questions. One, could you just comment a little bit on the YouTube ad revenue, that 9% year-over-year growth? It sounded like direct response was good, and it sounded like from search that retail came in relatively strong. So it's a little surprising that didn't kind of come through in the YouTube ads revenue growth. And then Sundar, can I ask you to try to get ahead of a debate in the market, which is there's kind of maybe at a DeepSeek moment again. You talked earlier about Gemini being the AI engine for some of the most successful software SaaS companies out there in the world, and it just seems like there's a market belief that the software companies are kind of losing seat power, losing pricing power, and it looks like it'd be a really terrible customer base. I can't imagine that that's actually going to happen, but could you just talk about it? You're at the forefront of AI and the impact that that's having on software companies. Why wouldn't that be, or why would it be undermining the economics of your large software SaaS company base? Thanks.
So, Mark, first of all, thank you for the question. For the full year 2025, our YouTube's annual revenue surpassed $60 billion across ads and subscription. In Q4, YouTube ads was driven indeed by strong growth in direct response. On the brand side, as Anat shared, the largest factor negatively impacting the year-over-year growth rate was lapping the strong spend on US elections. We also saw a slight impact in some other brand-related verticals. But taking a step back, I think it's important to think about YouTube ads and subs holistically, because when a user shifts from being an ad-supported user to YouTube Music and Premium customer, it has a slightly negative impact on YouTube ads revenues, but a positive impact on our business. And we had strong revenue growth in YouTube subscriptions this quarter, particularly in the YouTube Music and Premium category. Maybe the interesting part is what we're actually excited about, our roadmap in brand, the opportunity on connected TVs, more innovative ad formats. For example, the shoppable mastheads I spoke about earlier that we piloted during Cyber 5. We're working really, really hard to further connect brands and creators, scaling sponsorships, and enabling advertisers to showcase their products, their services during high visibility spotlight moments. We continue to expand the functionality of the Creator Partnership Hub, making it a lot easier for brands to actually find creators and develop campaigns. We're heavily focusing on brand deals, on measurement efforts. So there's a lot of interesting work in the pipeline. And on top of that, we actually see opportunity also for upside with performance advertising. There's a lot of momentum with demand gen adoption across small and medium advertisers. We're also excited about the opportunity for continued ads innovation and direct response, like, for example, shoppable formats, including in the living room, which is then helping drive strength in retail, the continued momentum in shorts, and so on. So overall, we're quite excited. Yeah.
Great. And Mark, on in terms of Gemini adoption and how what this moment means for SaaS, etc. Look, at least from my vantage point, I definitely see we have very, very good SaaS customers who are leaders in their respective categories. And what I see the successful companies doing is they are definitely incorporating Gemini deeply in critical workflows, be it on improving their product experience and driving growth, or using it to drive efficiency within their organizations. And I think it is an enabling tool, just like it has been an enabling tool for us across our products and services, be it search, YouTube, etc. I think the companies who are seizing the moment, I think, have the same opportunity ahead. And at least we are excited about the partnerships we have there, and the momentum. If I look at it in terms of their tokens usage, etc., the growth has been very robust in Q4.
Thank you.
Your next question comes from Mark Shmulik with AllianceBernstein. Your line is now open.
Yes, thanks for taking the questions. Two, if I may. The first for Anat is, can you talk a little bit more about the relationship between investment levels and how you kind of expect core performance to trend is there like an operating income or a free cash flow objective that you solve towards, or how do you think about greenlighting resources and projects? And then the second question for all of you, a year ago, we probably could have guessed the answer to this question. But given where we are today, for each of you, what keeps you up at night here as you think about the Google story and what's next? Thanks.
Thanks, Mark. Let me start with a question on the investment framework, and it's an important one, and as you can imagine, an important one for us as well. We have a highly rigorous framework that we use internally where we look at all the needs for investment, whether it's from our own organization or from external customers, and have an estimate of what that investment could potentially yield, obviously not just near term, but long term as well. So we take that into consideration when we make the following decision. The first one is the total investment that we make across the company. This was, for example, in 2025, the $91 billion we invested in CapEx, and our estimate for CapEx investment this year. So what's the total envelope that we want to invest to ensure that we can drive both near-term and long-term growth for the company? And then the second way we use that framework is to just allocate these funds across the organization, determine where we should make these investments. And throughout the year, as you can imagine, we always look to understand where things are moving, whether it's the external dynamics or internal dynamics. And I've mentioned some of the supply chain pressures we're seeing externally. So we look at this with a highly rigorous framework to make sure that we're making the right decision. It was exciting to see the fact that we're already monetizing, and you saw it in the results that we've just issued this quarter, the investments that we've made in AI. It's already delivering results across the business. I know in cloud, it's very obvious external, but you've heard the comments on the success we're seeing in search, the comments from Sundar and from Philip, and then the frontier model development that really serves as the foundation for the organization. We then also look at just the cash flow generation, the health of our financials and the balance sheet. That's important as well. So we take that into consideration when we make the decision about the overall level of investment. We want to make sure we do it in a fiscally responsible way and that we invest appropriately, but we do it in a way that maintains a very healthy financial position for the organization.
And yeah, maybe I can answer on what keeps us up at night. Look, I think overall we've been on this AI first trajectory for over a decade now, and it's what we've been methodically thinking our way through. It's the reason why we've been working on TPUs for over a decade, as an example. But I think specifically at this moment, maybe the top question, is definitely around compute capacity, all the constraints, be it power, land, supply chain constraints. How do you ramp up to meet this extraordinary demand for this moment? Get our investments right for the long term, and do it all in a way that we are driving efficiencies and doing it in a world-class way. And so that's where I think we are meeting the moment well, and but it's definitely an area where I'm spending a lot of time on.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have one for Sundar and one for Anat. Sundar, you mentioned Universal Commerce Protocol a bunch of times. I wonder if you could spend some time talking about the rationale for developing it, the opportunity that you see it solves for, and what it means for the product discovery funnel for consumers. And then for Anat, any color you can provide on a CapEx guide between longer duration assets like buildings and infrastructure and shorter cycle assets like technical equipment. That'd be helpful. Thanks.
Thanks, Michael. Obviously, people go through a lot of commercial journeys across many of our surfaces, search, YouTube, Gemini app, and so on. So I think there's, as well as we support through cloud and ads, our entire retail partners as well. And the opportunity to, improve the experience, I think can be a kind of a huge foundational uplift here. But it's important we are approaching it keeping in mind that our users, as well as merchants here, and figuring out that value. Part of what's been good in designing the Universal Commerce Protocol is it makes it much easier for users to complete transactions, but at the same time, it allows merchants to help showcase the range of their offerings if they want to make promotions, etc. So all of that is built into the protocol. And I think you have to get that value prop for the ecosystem right to make the experience better. And so it's foundational. And more importantly, we are now implementing the protocols, and our Gemini models are making progress in those agentic capabilities. And I think so I'm excited about a future where, as people are going through discovery, searching, finding new things, if they're interested in acting upon it, all of that is seamless. And so it overall creates an expansionary moment.
And the question with regards to the CapEx and the kind of what makes up the total that we've announced for this year and last year, approximately 60% of our investment in 2025, and it's going to be fairly similar in 2026, went towards machines, so the servers. And then 40% is what you refer to as long duration assets, which is our data centers and networking equipment. And I think you're probably referring to the depreciation delta between them. Those long-term duration assets depreciate over, the building could be 40 years or longer. Other components may be less than that. Another important component is how we allocate this CapEx. And we've commented in the past about the allocation of our ML compute across the business. And for 2026, just over half of our ML compute is expected to go towards the cloud business.
Thank you so much.
Your next question comes from Ross Sandler with Barclays. Your line is now open.
Great. Just a question on the native Gemini 750 million. So we added 100 million MAUs in the fourth quarter. Could you just talk high level about usage and retention of native Gemini? And is this 750 the right way to measure your progress against companies like ChatGPT, or is there another cohort of users that aren't in that 750 that maybe we should also consider? Thanks a lot.
Across, I think we definitely saw, I would say, extraordinary period of growth in Q4 for Gemini app. It's not just the growth in monthly active users, but there is definitely, there was a sharp increase in engagement per user on the app. So all the metrics, be it active usage, the intensity of usage, retention, all showed distinct progress across iOS, web, Android, etc., and geographically globally. So it definitely all the product experience improvements, the work we did with Nano Banana, the progress with the Gemini models, all translated into strong momentum. And that momentum, is continuing. So we are excited about that, and we'll continue to invest. Obviously, there are many people who are getting a deeply AI native experience in the context of AI mode in search as well, and we are definitely seeing strong growth and progress. And the introduction of Gemini 3 in AI mode was a very positive driver as well. And obviously, we'll continue to evolve these experiences, and I'm excited about the opportunities there.
Thank you.
Your next question comes from Ken Gawrelski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, both on search. First, could you walk us through how you are evolving your views on the monetization of AI search activity, given the more conversational nature and longer periods of engagement per session? Consumer utility is increasingly driven by the on-platform results, not specifically the link outs and referrals. in that construct, how do you think about increasing the revenue opportunity to match the consumer utility? Is this increasingly where premium subscriptions play? And then question two, and it's related. As you think about partnerships such as the new Apple partnership on Siri, how do you think about the right way to align for success with those partners? Previously, as disclosed in the DOJ documents, et cetera, it was a revenue share relationship. But now, if you think about the utility that you're driving through AI search and through through Gemini on those platforms, it may be less related to the actual search, quote unquote, search revenue. Could you just talk a little bit about how you align with partners for success there? Thank you.
So first of all, it may be worthwhile to say that the acceleration we saw in search was not due to a single driver, but was really the result of many different parts of our business showing strength and working well together. And maybe I quickly add the vertical perspective: retail, finance, health drove actually the greatest contribution to search revenue, though nearly every major vertical actually accelerated in Q4. More specifically to your question, the ongoing innovation is, as you know, core to what we do, and the enhancements to the user and the advertiser experience really continue to drive our performance. And we make hundreds of these changes every quarter. We see AI overviews and AI mode continue to drive greater search usage and growth in overall queries, including important and commercial queries. Gemini-based improvements in search ads help us better match queries and craft creatives for advertisers. I talked about the understanding of intent and how this has significantly expanded our ability to deliver ads on longer and more complex searches that were frankly previously difficult to monetize. AI Max, for example, is already used by hundreds of thousands of advertisers and continues to unlock billions of net new queries in that sense. We see strength with SMB advertisers expanding their budgets and adopting automation tools, leading to better ROI. On the creative side, we're using Gemini to generate millions of creative assets via text customization in AI Max and PMax, and so on. So we're very pleased with what we're seeing here.
And our last question comes from Justin Post with Bank of America. Your line is now open.
Great. Just want to follow up on the Gemini app. Obviously, great growth there. Are you seeing any cannibalization of search as far as activity as people start using that app more? And then second, on monetization, where are you on that? And with Agentic and other ads coming, could that be incremental to your growth over the next few years? Thank you.
Right now, overall, I think we are giving people choice. People are obviously using search, experiencing AI overviews and AI mode as part of it, and Gemini app as well. And the combination of all of that, I think, creates an expansionary moment. I think it's expanding the type of queries people do with Google overall. And so overall, some of it all is what we see as a growth opportunity. And we haven't seen any evidence of cannibalization there. And maybe Philip can comment on the monetization.
Yeah, I think Sundar previously commented on Agentic and how we think about it. And look, in general, as with all of our products, we really focus first and foremost on creating a great user experience. And we're very excited about where we are with the ads and AI overviews and early experiments in AI mode, including innovations like direct offers and our roadmap for the future. In terms of the Gemini app today, we are focused on a free tier and subscriptions and seeing great growth, as Sundar discussed. But ads have always been part of scaling products to reach billions of people. And if done well, ads can be really valuable and helpful commercial information. And at the right moment, we'll share any plans. But as we've said, we're not rushing anything here.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again and on our first quarter 2026 call. Thank you and have a good evening.
All right. So the stock rallied higher. And when they were talking about Gemini, that's when the stock was probably at its peak. But the stock's settling down. I think the numbers are the numbers. And before the earnings call started, analysts thought that it was fairly priced. I got the numbers. I think it's fairly priced. So it's a fairly priced business that has a very strong future. So my expectation on the stock is, I don't know that it's going to win the appreciation contest in 2026, but I just don't want to leave. And just a small joke while we're at it is, maybe Mike does get his wish and the stock comes down, he could buy it, and then we can all rise together, I guess, because I think this stock will not go into the teens on a PE. I think it'll continue to be a mid 20, maybe even 30, 32 PE if the Gemini business just keeps doing what it's doing. But I don't think there's excitement in the stock for this quarter. I think it's going to go sideways is my best expectation. Your thoughts, Daryl?
Yeah, they're doing some pretty incredible things. I mean, they've turned me into a user. I don't know how many times a day I hit Gemini, and if you'd asked me that 6 weeks ago, I've been, I've looked at it and I've tried it, but now I use it every single day, multiple times a day. So they're doing some pretty incredible things, and I think it's going to continue to grow. The CapEx number is, I'm not actually able to reconciliate it with what I've seen in the past. $175 billion?
No,
Is that what they said? 175 to 185 billion CapEx next year.
Jeez.
This year they spent 73. That's like over 2 times.
It's man, this AI stuff's expensive, huh?
Yeah.
It's like, geez, man, why don't you save money by getting, gold-plated toilets instead?
Mm-hmm.
It's expensive. So holy smokes. But I think if they could take the leadership, if they aren't already considered the leader, away from OpenAI, I think that'll be really important because, the story that we were hearing, 2 years ago was, Alphabet's on its heels. OpenAI may be that one competitor that breaks the search moat. Now, I don't know that that's a story. Now it's about, I think Alphabet does need to put its pedal to the metal and just put more distance between it and OpenAI, if anything, through its distribution. So I think that's how I'm reading it, and it's crazy how much they're spending on AI, how much CapEx, and we're going to see it play out. Not a bad time to be a semiconductor company, right?
Yeah, sure.
Speaking of which, they dropped a few names and said, hey, we're going to be spending a boatload of money on NVIDIA. And I saw their stock was rising, and so was the Broadcom stock. And it is picking up a nice bid in after hours, 2.26 higher. So the NVIDIA team and the Broadcom team, look at that, 5.53%. So they're going to be buying more semiconductors. And this stock did come down today, and so did NVIDIA. NVIDIA was down quite a bit. I bought some shares. So, but made a little bit of money in after hours, but I'm losing more money on Alphabet in after hours. This is a big position. So this adds up real fast. And then Micron is going higher, according to DJ. Yeah, that makes sense, because if you're going to have more compute, you're going to need the memory. So Micron's going higher. Micron's just been incredible, and the memory companies are just going crazy. Look at this, 321. Where'd that come from? Wow, look at that chart. Micron's just been incredible, and all the memory companies are doing the same thing. Pretty incredible. All right, so that is it, folks. Any departing thoughts on Alphabet?
I'm eager to see where they go tomorrow. Even though it's down today, it doesn't bother me too terribly. I think they have some very big things ahead of them. The way they progressed over the last 6 months, I think they'll continue to deliver. I keep growing this position.
Yeah. Google, it's up 64% 1 year. Okay. So it's like, okay, what's it going to keep, going higher? It's a massive, massive cap. But I continue to believe that the stock, the mega cap stock that's going to outperform in 2026 is going to be Amazon, just because they are a lower market cap, but they're just, in my mind, Alphabet's really important. They're very powerful. They have search business, YouTube, Google Cloud, but Amazon is right there with them. And if you look at the AWS business, if everybody's spending this much on AI, AWS is just going to get gigantic, and it's going to be it's such an awesome business. Oh, and FYI, they have the biggest e-commerce business that they're selling ad space on. They're not making any money on the product sales. They make a little bit of money, but on the ads, that's all margin. And then they have their streaming business, and they have just a really fantastic business. So this is where my capital is flowing, which enables me to introduce or mention, if you like this little session, why don't you join us tomorrow, same time, and we'll do this all over again for Amazon. It'd be kind of neat to compare cultures, Google, Amazon. Amazon's going to be really interesting. And this one is a what do you call it? A coiled spring. I think this stock could really work this year. This is what I'm thinking, because the financial figures have been held back because they were investing so much. If you recall, they were trying to get all these warehouses built out so that they can have 2-hour deliveries in major metropolitan areas, and they're doing that. So that keeps getting stronger and stronger. So tomorrow's earnings of Amazon, I think this stock could go higher tomorrow. The Google stock, it did its thing. It's doing great. But this one here, this one's a stock that I think can beat all the major caps. Of course, small caps are going to go up at a higher percent. Your thoughts on Amazon?
I like Amazon too. That's one that I'm growing right now.
Okay.
I like it as well.
Well, we'll watch it tomorrow. Really good session. Really interesting. Thanks for joining me, Daryl.
Thank you for having me, Victor.
Yeah. We had a big audience. Thanks, everybody. Really appreciate it. And look forward to tomorrow's earnings. Hopefully you can join us then, and we'll go from there. Everybody have a great night.
Take care, everyone.